30-minute bracket comes in and establishes this poor high, I guess you could say. It's not always a poor high, but in this situation, we've got an incomplete auction there. So had you seen this without doing research on the bigger picture, and let's say the market's trading up, you're like, okay, great, I see that the market left behind some a poor high up here, and we're coming back down to our support area. I'm going to buy this down here with the idea of coming up and cleaning that up. This is why I was stressing that you can't trade just off this tool alone. You need to use this as simply a form of confirmation for your trade, because you can easily get faked out, and obviously that's what happened here. There's probably buyers here that bought this, and the market just traded right against them and took out all these stops right here. There's a big cluster of volume right here. Those are probably stops being hit. So you got to keep that in context there. And this is what it looked like in more of a zoomed in version here. Still some major imbalance at the high there. A lot of selling absorption up here, imbalance on the offer here. Those are just resting sell orders, whether those were targets being filled or sellers stepping into the market to cut off the buyers and sell this market down. And what they did was they basically ate up all the inventory up here, and there was just nothing left. And then sellers started stepping in and started hitting the bid. This large volume cluster here was a bit of a battle, obviously, but then the market, once it broke below that level, the volume really got thin, and we got this fast move with a major sell side imbalance. I mean, look at the difference between the volume printing at the bid versus the ask. So these are just aggressive sellers here, putting market orders into the market, selling this market down. And then this level here, just a lot of volume as well, but it's just kind of a battle. And I just pointed that area out where buyers probably thought, oh, I'm going to buy the recent swing low here with the idea of cleaning this up. But there was still an imbalance on the sell side at the top of this bar, and it just could not trade any higher. And then sellers stepped in again and took the initiative to push the market lower. So with that being said, you have to be very careful with how you approach those incomplete auctions. There needs to be a reason for taking a trade beyond what you're just seeing on the footprint or the volume at price tool. So the next nuance is low volume areas. These can occur, as I had mentioned, from a news reaction, just kind of a knee-jerk reaction, maybe algorithms stepping in and pushing the market one way or another. A key example would be when crude oil gets their inventory number, it's just chaos that steps into the market. Same goes for natural gas. When the natural gas report comes out, it's just algorithms are hitting the market like crazy and just causing sporadic moves all over the place. And that also means that there's periods of low liquidity. If you watch the depth of the market, you'll see that before a news announcement, the depth really thins out, and this is what happens is you'll see these fast moves occur, and the reason for that is that the market's trying to find liquidity. So this is really just a temporary dislocation in the market that occurs, and once two-way trade comes back in, you'll see the market often return to those areas and fill in the volume. And this can be very helpful for you as far as if you're looking to establish a position and scale out. You'll know based on what you're seeing here that the market will come back and fill in those areas. So if your target to scale out of your position is in those areas, the likelihood of being having your targets hit is very high, obviously. But again, this depends on the day type and scenario and trade location, of course. Okay, so here's an example of what I'm referring to. So we had the market, it traded lower, and then we got a major imbalance on the buy side where buyers were taking the initiative to lift the offer. We had a low volume printing on the bid, and then we have an imbalance at the high here, and the market comes back down and fills in all that volume on the bid there. So how is this going to help you with your trades? Well, let's say that this level here is a key resistance area that you were looking to sell, and the market's, let's just say it's trading around, there's really no rhyme or reason, and then it starts trading up, and you just all of a sudden makes this fast move right up to your area. What that is liquidity just kind of backed off, and there's just this big cluster of volume up here, and the market is immediately attracted to that level. So it just runs right up there, and you get filled on your entry there, and you've got targets set at these levels here to just scale out and protect yourself. Well, look how quickly the market just came right back in and just filled in all this volume. So it was it's really just a great heads up as far as the possibility of the market coming back down and filling your targets. So just a nice little edge to have in establishing a position. But again, I can't stress this enough, the trade location needs to be from a predetermined area, not just because you see a low volume spike higher. You need to see this needs to be something important on a bigger picture where there'll be major participation at that level. So very important. And the next nuance that I'll discuss is the volume points of control. This just represents the highest volume level within each price bar. The location in which these form, as I mentioned, can give you clues as to what the underlying sentiment and order flow is with the market. So basically this is the highest level of volume taking place within this price bar, and where that ends up being can give you a good clue as to what's happening there. So in this example here, we have a market that traded higher, and it found a major imbalance at the high, and actually left a incomplete auction at the high. But what was, this was probably just a key area of resistance. So let's say, for example, again, you take a short entry from here, and you're scaling out as the market comes back in and fills in this low volume area here, and you're scaled out, and the market continues to trade lower, and we get a new bar that opens beneath this distribution area. And the first thing it does is it opens up, and you can see that a lot of volume got let out in this bar as well as this bar. So the market opens up and tests this particular bar's point of control. There's just a huge volume cluster there, and just can't trade above it. And then we've got above that another volume point of control. It can't even touch that now. And this is just another major resistance area and major change in sentiment. And there is sellers absorbing the price up here as well. And once that was absorbed, all that inventory got cleared out. Sellers came in and hit the bid. And once we got below this volume cluster area, look how quickly the volume thinned out. And then we just got this fast move down, and there's just a major sell side imbalance that was occurring at that point. So this is just something, a great way to watch your trade as it's progressing. I think a lot of people, once their trades start working well for them, they kind of feel like they want to get out right away as soon as they see the market going in their favor. And how do you really gauge the progress of your trade as it's moving along, so that you don't just end up getting out too earlier? And this is just a great way to see the auction starting to reject this major volume area by seeing that point of control. These point of controls basically just capping the market there. So excellent little edge to use. And this is another example of that. And this is really just the placement of the volume points of control, giving you a good sense of what the underlying order flow is doing and the sentiment of that particular period of time. So when we look at this bar here and this bar here, we see that the volume point of control is at the low end of these bars, meaning that there were resting buy orders here that quickly turned into market orders by this imbalance that occurred here. And the bar came down to this top of value here, and again, buyer stepped in and took initiative to lift the offer here, and we've got a major imbalance again. So that's just a nice confirmation, say you're long from here, to see the auction progress in your favor there. And then we get up to this this red line here is actually a previous point of control. So obviously some longs were using this as either targets for their trade entirely, or maybe just areas to scale out of that position. But clearly there was a cluster of volume there, and then the market auctioned higher and then came down and tested this volume point of control and major volume cluster, and it just could not make a sustained move lower. It was very thin volume that transacted at these two levels, and then we see a major imbalance step in again, and buyers lift the offer higher, and just all at the offer, just about, really very little printing on the bid, and it just kind of continued. And then finally buyers became exhausted and sellers started to step in here, and some selling came in, and the market broke below this distribution area here, came up and tested this volume point of control. There was actually two at the same level there, and only 100 contracts could trade there, and the market ended up trading lower. And then here we are back to this volume cluster area, and we've got a volume point of control at the low of this bar, and the market auctions higher from there and blows through this area. So this is just, like I said, supply and demand unfolding in real time. Clear view of the market's auction process. You're seeing inside of each bar, and just an excellent way to view the order flow here. Okay, so now that we've discussed some various nuances that are unique to this indicator and how we can use those to our advantage, let's take a look at watching the order flow when establishing a position to determine whether we're right or wrong. So this is just going to be all visual examples, and visual examples are usually the absolute best way to see what it is that I'm describing. So in this particular case, without showing you, top-down type analysis or anything, let's just in this particular case, let's just say that this was our resistance area, and we wanted to sell this with the idea of the market trading lower. So price trades up here. We can see that there is some absorption up here. There's some larger volume that's printing here, and we see that there was about 119 contracts that hit the bid there, and the market traded lower. And as we got lower, we see that there was a lot of large volume printing beneath us. So that's usually, when you see that, that's usually a heads up, like, wow, there's a battle taking place here. There's really, sellers are certainly in the market here, but we're not seeing major initiative or major imbalance on the sell side, and that's obviously what we want to see. We did move away from our entry pretty quick, but this high volume cluster is not very comforting when you see that below your entry area. Anyway, moving on, the market did trade lower, and finally we got lower, and we hit this orange line here is our initial balance high. I've referenced this several times now because it's a very key intraday reference point. So the market trades down here, very thin volume, and all of a sudden we get down here and we see large volume stepping in. And what this is either targets being hit or buyers stepping in. And in this case, it was really just buyers stepping in and absorbing these lower prices. And then once we got above this initial balance, we can see on the buy side a major imbalance that came in, and we got a new bar that came in, just thin volume, really nothing there, and responsive buying stepped in again, and or I should say they initiated more buying to lift that offer higher here. And we see once that occurred, there's a lot of volume stepping in here, and it's really just more buyers coming in and pushing this market higher. And then once we get up to our entry area, there's just a massive amount of volume stepping in here, and this is really just any recent sellers, their stops are being hit, or they're flattening out on their trades or whatever. And this again, same thing, moves up, just thick volume up here, and just stops and whatnot being hit. And then we trade back down to our entry area, and this is key. So as you know, as some traders that maybe they don't use a stop, they'll just wait for the market to come back in their favor and they'll get out. I wouldn't recommend that, and I also wouldn't recommend that with crude oil. But in this case, let's just say that's what happened here. So we sold here, market came roaring right back up at us, and blew out stops and whatnot, and then we finally came right back to our entry area, and there's a lot of volume that was filling in down here. And what that was is obviously those that did not get out of their or did not get stopped out are now exiting their position here because they know that there's order flow continuation going against them at this point. So if you didn't get stopped out here, this is probably a great area for you to just flatten your trade out and scratch that, because clearly you're wrong, as the order flow is continuing against you in the other direction. So and then once we traded down to this area here, there's really no volume, just totally dried up, and then buyers stepped in again, and it just got aggressive and lifted the offer up higher there. So just really some key visual things that occurred there. So again, those key things were high volume right beneath our entry area, and then we saw this buying absorption down here, and then a major imbalance to the buy side coming roaring right back at our entry area. So I mean, that's just a heads up right there that you're wrong. So very simple there. And this is just a zoomed in version of that. So there was some, at the very extreme of this bar, you can see that there was some large volume up there. And then this is that big volume here, and then this is our buying absorption, and then we've got this buying imbalance that's coming roaring right back up at us, and then this is just a huge mix of volume here. So, and this is where anybody that sold here started getting out here. So just nice clear perspective there. And here's a second scenario. This is same thing, selling previous resistance, and we can see here that there is a bit of an imbalance on the sell side up at the extreme here, but nothing too telling. So that's kind of like your first heads up, but that necessarily doesn't always have to be a specific number. It's we've got 644 here versus 2,131 with 1,452 at the very extreme there. So that that could be considered as some sort of selling absorption there. And then we see that there were sellers that stepped in and hit the bid on the way down. But then once we got to this lower extreme, there was a lot of volume down here, and once again we see large volume printing right beneath our entry area. That's our first heads up that that's not looking good. And then we did come up and trade right back just about to our entry area, but the volume just basically dried up and came right back down. And then we got to our initial balance high again. So this is a key reference point, as I mentioned, and we see here just massive volume here. I mean, this is huge volume coming in, and this is this dashed line here is our previous session's high, and there's only 276 contracts that traded there. So basically the market's rejecting that. They don't see any value of that level anymore, and buyers are stepping in here, absorbing any sellers that are coming into this area because they want to buy this and keep buying the market as it continues higher. So now that we see all this buying absorption, we see that buyers are stepping in now and lifting the offer. This particular bar closed at the high of the bar, and then we open here and the market trades back down to test this level, and again volume dries up, and only 40 contracts could trade below this volume point of control. And again, buyers see this and start lifting the offer again. And it's a bit of a battle here, but clearly you can see that there's buyers stepping in a big way. And here we are short, and we're seeing this coming right back up at us. And the next bar, this bar closes at the very high, and we open here. We come down and test this volume point of control, and only 934 contracts can trade there. And again, we see buyers stepping in and pushing the market higher, and now all of a sudden we're right back at our level again. And sellers that sold this are probably scratching their trade here, maybe playing some good defense there, and buyers are continuing to step in here, and we get a close again at the very top of that bar. And on this bar here, there's just even more buying coming in, and we've got 9,000 at the bottom of this bar here, with 4,900 at at the offer, and then the market just continues to move higher. So really what that was is just more trades, just scratching, and even more buyers stepping in. So it was just a great confirmation that you're wrong when you see this huge volume coming in right where you got in. So very easy just to see that, and fall on your sword and get out of that trade before you end up getting stopped out. And then we move up here, and this is big volume at the high here is probably stops being hit. And